I mean, firstly, this is not really coming as a big surprise. I think our expectation for the next 4 years is that we're going to have to deal with a lot of these headlines and kind of fluctuating narratives. And I think one of the main wildcard for this year is how some of these Trumponomics will materialize, right? So I think the market has been pre-positioning for some of these Trump policies, whether it's tariff or immigration or deregulation. Now we need to see how these things will be implemented, how do they materialize, and what it means for the economy. And I think the news flow into inauguration might keep market on its nerve.
Interesting. I want to show you how we have been moving on the Stock 600, because I feel the chart is very, very interesting over the last 48 hours or so. So basically, at the moment, we're actually above the level we had seen yesterday off the back of the Washington Post report. But you see that dip there. Are markets actually ignoring the comment from Donald Trump, basically saying that he was denying that report? How do we interpret this move?
Look, I think you have to put this last couple of days of kind of bounce in Europe in the backdrop of a significant underperformance of European equities last year, and many stocks which are exposed to tariff or trade uncertainties were the losers of 2024, right? So look, I would say in the grand scheme of things, what we are seeing at the start of the year is a pretty decent macro environment, right? Data is pretty okay in the US, not getting worse in Europe. And yes, there is maybe some hope that Trump will be much more pragmatic with some of these policies and will try to preserve or support the economy in the US, which means maybe less damage to non-US economy as well. But again, I think we should expect some degree of volatility into inauguration day. And look, market is up today and it might be down tomorrow if you have another headlines, basically pointing to more aggressive Trump stance on some of these things.
I mean, if today is an indication of what you just said, clearly we were lower in the day, now we're just a little bit above the flat line. But tell us about how is the outlook here. Do you therefore expect actually more upside for European equities in 2025, given all of the bad news having been priced in already?
Yes, we do, and I think the bar for positive surprise in Europe is not that high. Look, US exceptionalism is still very much our template for the year ahead, but it's very consensus, it's very expensive, and we think it's going to be more tempered this year. And again, as I said, the bar for surprise is not high in Europe. Valuations are very cheap, positioning is very light. And again, if, and it's a big if, but if not all the Trumponomics materialize as badly as what the market fear for Europe, that could be a chance for Europe to catch up. And we see some value in some of the global cycle plays which have been beaten down last year on expectation of very tough Trump policies. So we like tech, we like some of the consumer discretionary stock. We went back overweight on luxury goods at the end of last year. We closed the short on autos. So we think there are opportunities in some of the global cycle plays in Europe. It's hard to see what will really kill this US exceptionalism, but we see catch-up potential for Europe. But there are a lot of wildcards in play for this year, and look, I would expect a lot of volatility, and we won't find out for some time what's really is going to happen with those Trump policies.